In the meantime, Goldman Sachs cutting its growth forecast for the United States to 5.6% from 5.7% for this year and to 4% from 4.4% for next year. Goldman citing the expiration of fiscal support from Congress and a slower than expected recovery in consumer spending. Joining us right now to talk about where investors might want to start looking for opportunities, even if growth is slow, is Anastasia Amoroso. She is Chief Investment Strategist at iCapital Network. And Kevin Nicholson, who's Co-Chief Investment Officer of Global Fixed Income at Riverfront Investment Group. Anastasia, what's working right now, this reopening trade continuing?
Yeah, good morning, Becky. The reopening trade is very much continuing, and I do think is going to carry us further into Q4 and into 2022. And what I really like about the reopening trade is there are many different flavors through which you can execute. Clearly, there's the energy trade, which is very much working. And I think oil is going to continue to be $70, $80 a barrel for the next 3 months, most likely. So those energy stocks should do quite well. And then looking into 2022, I think we're going to see a very meaningful snapback in international travel and also the return of business travel. So that's going to continue to favor that reopening trade. And one other thing that I would throw in the mix, which, by the way, Becky, has not been working necessarily as of late, but this is what I would want to buy on the dip, are semiconductors, because the consumer demand for electronic goods, the corporate demand for things like 5G is still going to remain very strong later this year and into next year. And there's a lot of catching up the semiconductor space has to do. So lots of inventory restocking to come there.
Yeah, and Anastasia, part of the call that we heard about Goldman's concern about the slowdown comes from this idea that we're not going to get through these shortages. It's still going to be a problem into next year, maybe not even by the second half of next year.
That's right. It's going to take some time, probably 6 months, maybe 12 months. But that's exactly why I would focus on a sector like semiconductors. We don't have a demand issue per se, whether it's auto production that's likely to come back, whether it's the 5G cycle. We don't have a demand issue for semiconductors, but we know that they're shipping 40, 50% below what those demand estimates are right now. So as they rebuild, I think that's exactly the kind of sector that's going to have the pricing power. And we're seeing that right now.